Okay, so we commence in a minute. Okay, guys, welcome back. It's Katabaz here. We continue. So this is how the statement of activities looks like for an NGO. It's an NGO, not for profit organization. Yeah, NGO. Okay. So this is the format, and the format is not really very hard to master or feel, because at the end of the day, you have incomes or revenues, all incomes here. They start the line. Then after getting total incomes, you less all expenses. Okay, maybe the issue is on the fact that some incomes are restricted and others are not, but that information is always given. They will tell you that this is restricted, this is unrestricted, and there's this temporary and permanently restricted. So it shouldn't be a problem. Now, as you'll see, I don't really want to go through each line, but I'm saying these are incomes. Okay, you have already sources of revenues, which are the same as incomes, like investment income, membership dues, if there's a program service fee, if there's a donation, a grant. Okay, we say that all those are incomes. Then there are a few things that are a bit different now, like what you've heard of. You've heard of being released or released incomes. Usually those are restricted, but after the condition is met, they become unrestricted. That's what we call released funds. Okay. So that's why you will see now, like in this format, that they come from temporarily restricted and they go to unrestricted. Okay. That's the negative here, and this is the positive here. Then expenses, of course, is the way we know them, right? Then you get those. Now, the change or the difference, the deficit or the surplus, where you get revenues minus expenses. Whatever you get is either an increase or a decrease, or you can call it a surplus or a deficit in net assets. Okay, here down. And then we add this increase to the opening net asset, or you can say the net asset at the beginning of the year. Okay, so we add that difference, or that increase, or whatever we want to call it. And then the sum, of course, must end up being the net asset at the year end, or the closing net assets. Okay, so that is an income statement. So it's, I mean, a statement of, but we don't say income statement in this regard. We call it statement of operations or activity. So we can look at the question on that, and then also see how it looks like. So there's a question in this. I think it's this one, the following trial balance. Then they said, prepare, okay, the statement of financial performance for the year ended 31st December 2016. We would agree that financial performance is the same as statement of operations or statement of activities. Well, we look at revenues minus expenses. And whatever we get, we add it on the net assets at the beginning of the year. And then the resultant is always the net assets at the end of the year. And that is it. Okay, so let's do that question here. So this is the income statement. I mean, the trial balance, sorry. What is it? That's called. It's called. Who is my question? Bear with me. That's question 2, I think. Yeah, question 2. Okay, so that's something that you will see in the total balance that you must not. And this one is not an expense. It's not a revenue. It must be an asset or a liability. Okay, which you will see. Now, this is I hope you all have the question. The document, I shared it in the group. This question 2. So I'm going to refer to this every time when I'm sharing the screen. Okay. So I can get my workings ready. So under my workings, without even thinking too much, you know, this is statement of. I hope you can see statement of financial performance. Stick to what I've told you in the question. Yeah. Ended 31st December 2016. So what I've told you in the question. Don't look for your own things. Don't say, I know the other name of the account. It's called statement of operations. So I'll put statement of operations. No, what I've asked, put that. Okay. Show you that. Here, they said prepare a statement of financial performance for their ended. Carry this thing the way it is here. Okay, statement of financial performance. Maybe what you want to add here is the name of the company. That's called. What is it called? It's called hygiene. Okay. So that's what you want to add on your heading, maybe hygiene statement of financial performance. That is it. Now we know the format. Okay, we're saying we have details here. Okay. Shall have unrestricted funds. You shall have restricted, temporarily restricted. The format doesn't really change, so there's nothing to think about. Temporarily restricted, and then permanently restricted. Then you have the total column. Okay. So that is it. So I know that what I should have, maybe you can confirm if they're in thousands, you also have to say they're in thousands. Yes, the figures are in thousands. So you can put it here in your heading, you say for the year ended in UGX, thousands. Or you could put those zeros down here. You say UGX, thousands. The options are yours.
You are not sharing your board. Okay, I hope you can see it now. Okay. So you want to do this, but this is a bit some takes long. So you rather put it in your heading, just your 1000 and you're done, rather than doing it for all. So, but you could do that also. Then what doesn't change is the fact that you have to have revenues first. Then after getting total revenues, you have expenses or expenditure. Expenditure. Okay.
And then you also have total expenditure at the end, or total expenses, whatever you want to call them, was the expenses. And then the difference between total revenues and total expenses is either an increase or a decrease in net assets. And then after that, we add net assets at the beginning of the year, what you call the opening balance. At the beginning, just at the beginning, okay? And then the sum should give you the net assets of the year end. Okay. So now you go to draw balance and you pick the information as it is. Yeah, pick information as it is. I already said that I won't be sharing this often, so I can share it for now. Just see how we pick them. So line by line. So accounts receivable. Okay, you know this is an asset account. Yeah, current asset. So don't mind. Account advances. Whenever you see advances somewhere, see that is a balance sheet item. Okay, accountable advances. That's a balance sheet item. And these ones are actual receivables because what happens is when you have field workers, they may be going for field activity, but they can't go without money. So you issue them what you call an advance. Okay, now whenever you give them this advance, is you want them to return with accountability. So before they return the accountability, you record accounts receivable. You show that you expect this money back. Okay, but if someone comes with accountability, then you write it off and you expense. Okay, by saying I don't demand this guy anymore, but we actually spent on this particular item. Those are advances. Then administrative expenses, the admin expenses. So we begin with this line, admin expenses. One of the expenses. So you go under statement of your statement, which is the financial performance, under expenses, and you say admin expenses. Okay, because for them they are unrestricted. Okay, so you can put them unrestricted, and they don't have anything like permanently or monthly. And for them, you have spent. Okay, so how much is it? It is 9 million. Okay. Okay, then we continue. So like I said, I won't be sharing the screen again. The next line is the resource development expenses, still the expenses, as you can hear the word. It's 900,000. Development expenses. Somebody may say the development expenses. Yeah, development expenses are only capitalized if they have told you that they were development expenses and they met all the conditions where you have management being confident, being available. If they don't give you such information, then don't assume that's a current or it's a capital asset. Don't assume that it is an intangible asset. Okay. Then we have investment income. It's the investment income. It's an income, so sorry, because under revenues, investment income. Share code the question, please. I'll share again, but it's already in the group. Okay, it's part of those notes that you have. What do you call them? Not for profit. Financial statements for not for profit. I've shared in your groups. Okay, can now go there. So we continue. Revenues, we're seeing investment income. Can I say investment income? Okay. Once they don't say anything like restricted or temporarily restricted, then it's assumed that they're what? They are not restricted. So that is 270.
Mia kalama di kana kare na rewa na iti.
Okay, the next line. So as you're seeing, of course, you'll be knowing what you're looking out for. That's maybe a challenge, but it should be an easy thing. Then cash and bank, those are current assets, so you don't think about them. Investments in treasury bills, it is an investment, so it's current asset. Prepaid electricity, it is prepaid. Okay, so this is current asset, not an expense. Property and equipment, yeah, that one's you don't even, I don't need to even say a word. Accrued, telephone costs accrued. Okay, prepaid and accrued, both incomes and expenses are balance sheet items. Okay, then rent expense accrued, then interest payable, security payable, membership dues. Okay, whenever it's payable, usually that's still a liability. Don't do anything. You go under the balance sheet. So we have membership fees. Those are, of course, so that is a source of income. So we come and say membership dues. For those of just put in the document, it is question 2. Illustrations. I don't know which page it is. Let me see. From the page. It's page 16. For this time, which question I attempt to. It is question 2. I'll share it in the group for those who don't have it, but there's also financial statements of NGOs. Hygiene. Okay. Maybe I can share the question for the last time. Okay, this question here, question 2, hygiene. Okay, registered membership dues is an income 20 million. Okay, it says restricted or not restricted, so don't overthink about it. Just not unrestricted. 20 million, and then we continue. Then you have temporarily restricted funds. I've told you, temporarily restricted, and they are how much? 16,756,200. Okay. Let's see. Okay, 16,756,200. You didn't tell me where the money is coming from, so I feel I should put it under here. You didn't tell me which item is it. Membership fee? Is it what? Okay. Then program fees. Okay. Program service fees. Still didn't say anything, just know it's unrestricted. It's 6,750. Then you have grants receivable. You said grants receivable. So those are whenever you say receivable, those are current assets. Okay. Then unrestricted funds of 600. Okay. So this feel like opening balances, but I don't know how to put it. So I can put it here. 600,000. Cool. Then rental income. It's rental income, so it's income unrestricted 400,000. Rental income. Okay, then interest income. It's quite a lot. Income. Okay. Then net assets released from restriction. Okay, so you know those are they're coming from temporary to unrestricted. So you come and say net assets released. Okay, so they'll come here under unrestricted, which is 8 million. But where are they coming from? They cannot come from permanently restricted. They can only have come from temporarily restricted. Okay. Then accounts payable, it's accounts payable. Then program service expenses. Still now we have expenses, you come under expenditure, program expenses. They give you a list. They said you have sponsorship programs, 10 million, 5,000. Respond to someone's question. Pardon on net assets, please. It is net assets released, not net assets. Yeah. Net assets released from restriction. We say that we have two types of restricted incomes. You have temporarily restricted and permanently restricted. So the only releasable income or revenue is the temporarily restricted. That whenever it meets some conditions, then it qualifies to be unrestricted. Whereas for permanently restricted, it is permanent. Okay, it doesn't change. So whenever there's a release, it comes from temporarily restricted. So what we just done, that you go to your temporarily restricted and remove the money, 8,000, and you put it under unrestricted. Okay. Continue with our expenses. Direct services, 750. So swatch. Sponsorship. Then you have support. This is expenditure or expenses. I've said it. Pledges receivable. Pledges receivable is still a current asset. The guys who make pledges, like the way it is with weddings. Okay, that's you're in meetings and someone will tell you, I pledged 30,000. I pledged maybe 1M. Okay, he's not going to give you the money there and then, but he's giving a word, it's a promise to pay you that money. So what we do is we record it as a current asset because we're expecting the money.
Kataba's your screen.
Okay. There you go. So we're saying pledge. You don't put it under performance, it's under balance sheet. Pledge receivable. Then permanently restricted funds. Okay, permanently restricted funds. So it's 2.2. Those are incomes. They come here. 2.2. 7. Okay. This feel like opening balances, but it's okay. So what happened during there? That you got these incomes that are restricted, unrestricted, and for restricted, you have both temporary and permanent. Then bonds payable. Whenever you see payable, I already told you payable or receivable, those are balance sheet items. Okay. So you're done with all the items regarding the income statement. Maybe what is nice here is the fact that you have net assets at the start of the year. This one's already talked about them. That those are opening balances. So when you go to your format, okay, under net assets, see net assets at the beginning of the year. So for temporarily restricted, you have 10 for 400. Okay. Then for permanent, you have 54,000. Then unrestricted, you have 588,776. It is still on the format. How about the 600K in the unrestricted column? Where is it? Unrestricted. It was given. They said that you go to this question here. I mean to the question. They said that unrestricted funds 600,000. Okay, just like you have temporary restricted funds of 16.7 and then permanent restricted funds of 2.2. Is the same way we have unrestricted funds of 600. Okay, they happened during the year. Okay. Incomes. Okay. That were unrestricted, then these were temporary and stuff. So officially, we are done with the extraction of incomes and expenses, and also have the net assets at the beginning of the year. So our task remaining is getting totals, and then we see what we can get. When it's silent, we assume it is unrestricted. Yes. Okay. So totals we add across the row. Okay. So we are adding unrestricted, then you add temporary restricted, then you add permanent restricted. Okay. So this is Excel. Let me just try out one more. I'm saying I'll try out the one which is down. Okay. So we're saying you're adding across it, saying equals to unrestricted plus temporary restricted plus permanent restricted. It's across. So like that is what you have. Okay. Then you get the total revenues. Can be space here. Okay, total revenues, you add each column at a time. Eh? So you're adding from up to bottom. So it's that for that. Then like this. Eh? So we're adding that. Okay, horizontally. Sorry, vertically. Okay. I don't want you to really draw on this figure. This figure here is you can either add these or you add these ones across. You must get the same ones. So you don't have to overthink about it. That's what I'm trying to say. But whichever way you want to add them to be correct. For those of you who always want to spend time on proving when time is moving. So total revenues, you're done. Then you go to expenses. Okay, expenses still you just add these. Okay, because totals now must be the same as this side because you're going to add this, then plus 0, then plus 0. Okay, you have that. You add across. Then we get our total expenses. Total expenses, just add expenses alone. Don't add everything. So still here you're adding from top to bottom. Okay. These always be the same as this side when you add them together. All right, so that is your expenses. Then you get your either increase or decrease by subtracting it. So it is total revenues minus total expenses, like that. Okay. So since they're both since they're all positive, yes, increase. Increase in net assets. By the way, the other name for statement of financial performance is statement of changes in net assets and also statement of operations or activities. Okay, they're the same things. So increase or decrease, that's what you get. Okay. These amounts here, feel free to ignore these. You can still remove these and just add them once this side. But ideally it's supposed to be like this. Expenses are only in the unrestricted column. Yes, although like I was saying, we just talked about it. I'm saying that you can choose not to put them under any, either temporarily or temporarily or permanent. Just bring them in the total column. Will still be fine. Okay, so that is it. Then officially, you now get the closing net assets by adding the increase or decrease in net assets to the opening balance. So when I add, saying it is this one here, the change plus the opening balance. The cost and the total is across this plus that. Okay, so this is how we do it. Okay, and send some pardon on this on the names, please. The names of what? The names are as they are here. Unrestricted, temporarily restricted, permanently restricted. So guys, that's how we do statement of performance. Any questions on this? Because after this one, I'm going to do now the balance sheet, and we should also do a cash flow because cash flow is easy for a not-for-profit, so it's very easy. So there are 5 minutes left on this link. I don't intend to start something new. You can ask a few questions on this.